The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 20th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that just simply empower human potential, because living up to our potential is what we must master each and every day. So let's begin with an empowering belief. This is one that I like to phrase or think of as dedication. Dedication is an attribute of success. You know, it was Thomas Edison that once said, genius is 1% inspiration and 99% perspiration. Edison, he was never discouraged when he didn't get results, even after countless experiments. When a friend consoled Edison after his repeated failures to make a storage battery work, Edison said, I've not failed. I've just found 10,000 ways that it didn't work. Oh, that is a beautiful way to look at life, folks. In Edison's later years, when asked how his developing deafness was affecting him, he said, I find it easier to concentrate now. Nothing like a good sense of humor out there. Folks, when we pursue a goal, we may sometimes encounter setbacks. There are many men, many women throughout history who have achieved critical success only after trying, then trying again, and trying again and again. And you and I, we just need to do the same thing. Dedication, that is absolutely an attribute of success. In this market here, it is dedicated to moving higher. Right now, we've got the Dow off 4 points. The S&P is up 1, trading at 1668. NASDAQ up 5, trading out at 3503. Russell 2000 up 87 cents, trading at 997. New York Stock Exchange up about 5 points right now. The Philadelphia Gold and Silver Index up 31 pennies at 97.81. Our call-in number is 877-927-6648. Give us a call, folks. Would love to speak with you. We can take a look at your equity or answer any question that you might have as we start the 10 o'clock hour here. We've got advancers leading decliners by about 290 on the New York Stock Exchange. But let's start off by taking a look at the S&P 500. That's the chart that we've got on our screen right now. If you are listening in on TFNN.mobi or a radio station, thanks so much for doing that. Remember, you can always catch the archive of this show on Channel 10, but more importantly, you can see the live stream here by just going to the homepage of TFNN.com. Over on the right-hand side, you'll see that button with the three little smartphones. Click on that. This show will stream live to you. We're looking here at the S&P 500 daily chart. It's traveling at 1668.39. We thought that the 1650 area was going to slow the advance down in the S&P 500, but no, that has not taken place. 1650 was really a primary trading range boundary line. Now that the S&P is above that, unless it gets back in there real quickly, that says the S&P has 1700 written all over it. That would be the midpoint of the next primary trading range that it is traveling within. And if 17 doesn't hold it, well, that sets up a move to 1750. I'm going to have to add a few more lines in on my chart here because I don't have that next level, at least the top of that next level established. But I'll get that in there. That is on the S&P 500. It's up over above that rising price channel out there. Of course, that's not really a breakout because price was traveling inside. It was traveling to the upside, so any real breakout in this case here would have had to have been a breakdown. So just simply up above that area, and that says that 1700 is now the potential inside the S&P 500. Unless any kind of bears show up. We haven't seen any bearish candles, any reversal signals other than the one that showed up here on May 1st. It was for 1 day out there because that was reversed on the following trading session. S&P 500 most definitely is in the overbought territory, so we'll see if that is just simply going to work its way up by moving sideways or if we see a pullback underway. You'll see a reversal candle if this market is going to reverse, and it'll have to be more than just a one-hit wonder, which is all that we've seen since the beginning of May here, and that was on May 1st out there. We saw a little bit of a reversal session on May 9th, but with the body of the prior candle being so small, those are always a suspect out there, and there was no follow through to the downside on that next trading session. That's on the S&P 500. Let's go take a look at the NDX. This, as we said a while back, this was going to be the wild card out here because of that 0.786 Gartley sell pattern that was in place and then finally failed here on April the 10th. And it failed on April 10th when we got a move up into 100% move of a move area. That meant going back to the September 21st swing point. That then, when you have a failed Gartley pattern, yes, it's going to do a move of a move. That's exactly what it did out here. And then it's going to seek butterfly range. Well, 1.272, that's in the 2985 level. Now that you're up at 3,029, and without any reversal signals in place here inside the NDX or any reversal signals that have held, you did have a shooting star. That is the kin to the hammer candle. Hammers you're going to see on the bottom. Shooting stars you're going to see up in the skies, of course, up at the highs out there. It's one way to think about it. But that shooting star was taken out on Friday with that advance inside the S&P 500. Now you're well enough above the 1.272 area of the butterfly sell pattern. That says when that fails, then you're going to go head up to the 1.618 level. Inside the NDX 100, that'll take you all the way up into 3116, about another 90 points north of where we're at here. So unless the bears decide to show up, and with the market being in the over-bought condition that it is, that is potential to occur. But short of that taking place, 3116 is where the NDX will head to. That's on your NDX 100. Let's go take a look here at the Dow. We take a look at the Dow right now. That's having a little bit of a struggle here this morning. We'll go in and take a look maybe during the first break here, or after we come back from the first break. We'll go see what is struggling with inside the actually, let me just peek over here real quickly, see what is the struggles inside the Dow here. Well, it's nearly most of the equities. American Express is leading the charge. Chevron is up 40 cents. American Express up 78 cents. But to the downside, you've got Merck, Procter & Gamble, IBM, Cisco, Walmart. So you've got maybe about three-fourths of the Dow is in the red, just slightly red out there. But if we take a look at the actual Dow index itself, the best I can see here is a possible A to B equals CD up. If we take a look at that retracement here, that would be coming off of this little hammer candle back here on April the 19th. We'll see that the retracement was about a 0.382 retracement. That says you'll do more than a 1-to-1. A to B equals CD. In this case here, it's completed the 1 to 1.618. A to B equals CD. That was in the price level of 15,335. Right now it's trading at 15,342 out here. So it's the Dow that we'll want to be paying attention to as well to see if there's any kind of reversal signal. Now, when you take a look at Friday's candle, that was if we pull this back a bit here, really a wide-ranging bar out here. Markets don't end on wide-ranging bars, so this would say that, you could be taking a look at a couple of sessions here, traveling sideways before we get our next potential move, whether that's to the upside or to the downside out here. But on wide-ranging bars, very rarely do you see a market end, and that's what we had on Friday with that 121-point move north here. If we do take a look at the Dow itself, no reason for the Dow not to, it's above the 15, above the 15.5. I've got to take a look here at my system. Let me come back to that. I've kind of gotten a little lost there. So let's go take a look. My apologies. Let's go take a look at the Russell 2000 here. Let's go see what's going on inside the Russell 2000. That had been a weak link here, but it's been catching up as of late. The Russell 2000 did have a confirmed A to B equals CD. The 1 to 1.272, that level has now been taken out. Looks like 1004, 1003.69 would be your 1 to 1.618. A to B equals CD. And looks like that is the next move here for the Russell 2000. Let's go take a look here at, how about the New York Stock Exchange? We take a look at the New York Stock Exchange, and all these patterns here just simply are failing. Anything that had been should be a reversal pattern. This was a 2.618 expansion pattern. That was taken out, so that has failed. No reason to even keep this little bugger in here any longer. Inside the New York Stock Exchange, coming all the way back into the October lows of 2011 out here. We're looking at a rising price channel, so it looks like what the New York Stock Exchange wants to do is get up to about the 96.55 level. That would be your 1 to 1.272. A to B equals CD, and that would take you right into the top of that rising price channel as well out there. Let's go take a look at the ETF structure here. We'll take a look at the diamonds, the SPYs, the IWM, and the Qs. Let's start off with the Qs out here. The Qs looking just like the NDX. Now, if we take a look at volume here, and what I mean by taking a looking at the NDX, you're seeing the 1.272 butterfly. That was in the price range of about $73.11. We did see that little shooting star formation here on May the 9th out there. That gave way. Again, this is the QQQ that we are looking at. We take a look at the volume coming off of the X point here. That's what we're measuring these expansions from. That is the September 19th, 2012 swing point. 70.58 is the high there, 36 million shares. What we can see is as the Qs have gotten above that, they have not taken it out with volume. Got up to about 36 million on May 14th as well. And so still you have this little tiger butterfly pattern that is in place inside the Qs. But you're up over 73.11. You're at 74.35. You're really in kind of the mid-stroke. If we take a look at that overbought, oversold condition, most certainly overbought up here. And but says that the Qs can most certainly run to 76.23. That's if any of these patterns are even going to work out here. Nonetheless, we still pay attention to those expansions because at some point in time they will come back and start working out here. So 74.38, that's what the Qs are trading at. We've been trading here for about almost 45 minutes, well, a little over 45 minutes, I should say. Volume today, 5 million shares out there, so nothing great from a volume standpoint today as well. So it looks like another low-volume market that we've got at least unfolding at the moment. Let's go take a look at the Russell 2000 at the IWM. The IWM had formed and completed a 1.618 butterfly pattern. That was coming off of the March 15th swing point high. That level was 94.96. The low down here, that's where you're going to measure your expansion from that high on March the 15th to the low on April 18th. That was 89.13. That gave you the 1.618 expansion right around the $99 level. That's what we hit here on Wednesday and Thursday, and then Friday the market proceeded to go ahead and take that out. That pattern is still somewhat in play out here. 98, we're going to call it 98.50. You're trading 99.21. So that truly has not been taken out just yet, but it does look like the IWM wants to run into the top of that rising price channel that it broke out of, and that would also be your 1 to 1.618 A to B equals CD. So it looks like 99.85, and you're at 99.20 may be the next target range for the Russell 2000. That leaves us with the SPYs and the diamonds, and we're going to go ahead and we'll do that when we come back from our first break. Our call-in number, 877-927-6648. Right now, Dow's off 5, S&P is up 1 point. We'll be right back, folks.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at
727-445-1044. Welcome back, folks. Dow is off 12 points right now. S&P totally flat, is up 7 pennies. Composite up 3. Russell 2000 up 32 cents out here. Gold and silver right now. Gold back $8 and change, trading at $13.57. Silver's down 68 cents. Off of its session lows out at 21.67. Light sweet crude just back slightly down 12 cents right now, out at 95.90. I went ahead and pulled the Dow up here from and went back to 1998. Now I just pulled it up on my screen out here. And so that's what we're taking a look at. We'll go back and take a look at the SPYs and the and the diamonds here just after this. But taking a look at, just wanted to take a look at inside the night. So from the lows back in the Dow back in the 98 time frame. So it ran from 1998 all the way up to the high that was actually put in inside the Dow. That came on January 14th in 2000, and that's when we saw high. Now, if we're taking a look here, this chart here, it's notated. We can see the May 1st high that was out here. This is showing some of my sell in May cycles out here. And in May, eventually the Dow, if we take a look at what the 200-day EMA average was, it finally pulled back into it still during that 6-month seasonal cycle. It did that back in the October, September time frame. So it took a while before it did that. But really, I was primarily going ahead and taking a look at some of the expansion patterns because, as I mentioned earlier, these great butterfly, Gartley patterns out there, when they fail, they fail, they tell you that there is a strong trend underway, or it tells you the next levels that you go to. So if we simply go back into that time period here, because the question is, are we in a similar type of a zone or time period out here? Let's first just take a look at some expansions of swing points. And inside the Dow, we would go from July 20th, 1998. That price level was 93.67. I haven't done any of this work, so we're just simply doing this live, just trying to see if we can see any patterns out here, any similar failures, or just anything out here. So we're starting off at July 20th, 1998. 93.67 was the number. That was the high. The low swing point came in on September 1st, 1998. So the 1.272 level, that was 99.03. That ended up holding as a resistance zone for looks like about 4 or 5 trading sessions. That number was hit really on March the 1st, 1999, and pulled back into a low. Was I guess a little bit longer than a few days. The low was made on March 24th out there. Price proceeded to blast right through the point 1.618 expansion out here. In fact, it never really held at that area. It got up there for the trading session of April 20th, 1999, and then just simply moved a bit higher before it went ahead and moved up to the next level, which was 2.0 out here. Let me pull this back just a bit, and I think I have on this, let me see if I do, the 2.618 expansion. Yeah, I do. Now, I've never made it up all the way to that level. So what's the conclusion one can draw here? Well, at this stage, it made an expansion of 2.0 before we really started to see any kind of significant pullback into that 6-month seasonal low out here into the September-October time frame out here. So you can see it was a 2.0 expansion off of a set of swing points. In this case here, July of 98 all the way down to the low of September 1st, 1998. So a 2.0 expansion. So let's go now we'll go forward, and we'll look for a similar set of swing points, and we'll just see where the 2.0 expansion is. So give me a moment here to now travel forward in time, and so we can take a look at this. I just have to move this thing forward a bit here, a little bit more. All right, so now we're back here, and the set of swing points that we would look at to be similar would be to 1998 time frame. We'd go from that September swing point high. So if we go from the September swing point high in the Dow here, it's actually going to be October 5th. October 5th, we got out to 13,662. You were at 13,653 on September 14th. So we use October all the way down to the swing point low that came in on November 16th. Well, you can see we're well above the 2.0 level. That would have been 14,852. So now let's go track back. Let's see what 2.618 is. And 2.618 inside the Dow would take it to 15,587. So if you'd say we're in a similar cycle as maybe what we saw back in the 98 time frame, with a market that has really only one direction, now that we're above the 2.0 level here, and we are still in that 6-month seasonal cycle, would say that the Dow maybe wants to head to 15,587-ish before it begins to pull back. And right now it's at 15,342. So just doing some type of correlation to the markets of the past, and we'll see. We'll go ahead and mark that down on a sheet of paper, and we'll see if that comes to a reality out here. 877-927-6648. Dow's off 12 points right now. S&P totally flat. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, in the currency markets here. We're taking a look at the U.S. dollar, Japanese yen monthly chart on my screen here, and we can see the descending price channel. This, folks, goes all the way back to the highs here in 1998. We were taking a look at the 1998 time period inside the Dow. You can see here the Japanese yen made its high back in 1998 out at the 147 level. As we take a look at this chart, it's not the all-time high of the yen. But if we go take a look at it coming back here into the 1998 time frame out here, you can see that descending price channel. We can see that price has bumped up against that here this month as it made a high of 103.29 out there. So it's been one heck of a move coming off of the bottom here from October. So a nice move here after 6-7 months here as it has moved higher. So the question is going to be, it's also the dead cat bounce area, the actual 0.382 from the high here of 147.66 all the way down to the low of in October of 2011 out at 75.55. The actual number 103.09, and what we've seen so far is a high of 103.29. You got to love that. So the dead cat bounce is in, also running into the top of the descending price channel out there. If we take a look at the daily chart from a currency standpoint, what we will see out here is we'll see that the yen, U.S. dollar, Japanese yen currency pair had been traveling in a sideways consolidation area. That consolidation range really began right around the April 3rd time frame So from April 3rd all the way until May 9th, so just over a month, we had the U.S. dollar, Japanese yen traveling sideways. That was after having made the 3 drive to a top pattern out here. So in that 3 drive to a top pattern, that's in essence what that looked like here. When that failed, that's had strong momentum underway. And at a minimum here, when you take a look at the consolidation range, you're trying to figure out, well, where is it that price could go to? You certainly want to take a look at those consolidation ranges because your next move should be equal to or greater than that consolidation. That's exactly what we have seen thus far unfold inside the U.S. dollar, Japanese yen. We take a look at these 2 yellow boxes. They're the same height out here, and we can see here after the breakout session which occurred here on May 9th, this is the U.S. dollar, Japanese yen, moved up to a high of 101.78. Once it broke above and closed above the level of about 99.87, that set up the move into what we've now seen as the 103-ish level. So you can see we're right about that area. So running on the daily chart, it's fulfilled one of its moves, which is the same as the consolidation move. On the monthly chart, it's running into resistance. We'll see if that area will hold. We'll continue to peek in on that chart. Now, speaking of currency, folks, you've got an opportunity to increase your currency by going to the homepage at tfnn.com and signing up for our Tiger Dollar promotion out here. It's a way for you to make 20% on your money. So if you do subscribe to any of the services here at tfnn.com, or maybe you're on the fence, you're thinking about it, now is the time to do that. It runs for the rest of this month. You receive a 20% bonus. On top of that, for anything that you purchase in Tiger Dollars above $500, you'll get an additional 5% that'll be donated to the One Fund. And if it's above $999, it'll be 10% donated on your behalf, tax deductible and everything. So a great way for you to take advantage of a program that we do here just a couple of times a year. And now is the time for you to go ahead and load up and make some money on your currency as well by getting Tiger Dollars. And if you haven't had a chance, folks, to check out the Art of the Charts, do that. Just an incredible piece of software that David White and Tom O'Brien put together. $59 a month for that software. But really, when you take a look at the time savings of being able to just simply do hit one click of a button and load up all of the potential Gartley or butterfly buy and or sell patterns that are setting up by scanning about 5,000 stocks. So that's all the stocks inside the New York Stock Exchange, ETFs, and so forth. What a great way, what a great tool to be able to save you time if you're just trying to understand, hey, what is some of this stuff that they talk about, A to B equals CD, or how about what are these retracements, or any of these Fibonacci numbers, what is confluence, all that stuff, all of it answered for you in one location out there. So it'd be great to have the Tom's book out there, The Art of Timing the Trade, along with the Art of the Charts right next to it. That's a beautiful thing, all that great art out there, and that will help you to create your own art and understanding what's going on. So you can try that out for 30 days, unconditional money-back guarantee out there, as well as you can sign up for a year and save 35%. So a lot of great opportunity for you to put your currency to work in the marketplace. So if we go check in here on Goldilocks, see what gold is doing here right now. We'll take a look at gold and silver. Then we'll take a look at what's moving, what's leading to the upside and or downside percentage-wise in the market. And gold here trading at 1356. It is trying to the bulls are trying to come out here inside gold, but still trading inside the swing point from April 16th. Don't be fooled by it right now. That says more so than not it wants to go test 1321.50. It has traded as low as a price point earlier this morning, about 4 a.m., I believe it was, right around the 1336 level. So gold continues to trade inside that swing point. It has broken that point, 786 retracement level. Yes, it is in the oversold territory on this RSI indicator, but, it can just simply work its way off by just simply moving sideways. On silver, silver is below the swing point. That swing point level from April the 16th out there at $22 even. You're trading at 21.67 right now. So that has you can see what has really stopped silver here is the 1.618 butterfly. So it's made that. It also is in the oversold territory. So now does it just simply work its way off before it goes ahead and travels down into the $17 range? Well, I'd have to say most likely yes. When we took a look at King Dollar out here, speaking of currencies, the U.S. dollar index, it in fact has gone ahead and confirmed that it wants to go ahead and turn into a butterfly pattern. It's made its 100% move of a move. It actually has, this is the weekly chart that we're looking at, it actually has more room to run to the upside. It is not overbought by any stretch of the imagination on the weekly chart as we look at it. So it says it wants 85.78, maybe 87.73, somewhere in that range, and that should continue over the longer haul here to keep pressure on gold and silver out in the marketplace. So that had broken a big trend line. Now has broken it with conviction and up over horizontal resistance. Horizontal resistance, in my opinion, has more meaning than diagonal type resistance does. It broke the diagonal resistance back here. Well, it did it a couple of weeks ago. It first broke through that level back on the week of March the 29th, but we saw some conviction behind that move the week of April 10th, and certainly we did last week as well. So with regard to a little bit of a longer-term picture on gold and silver, looks like the way that things are setting up is they actually still want lower price and want to fulfill their price objectives. In the case of gold, it's in the $1,200-ish range out there. If we take a look here at a question about platinum, let me see if I've got that chart on the screen. If not, for Angie, I'll go grab it during the, let's see here. I don't see it on this chart, but let's go take a look at it anyway. Give me just a moment here. We'll pull up the platinum chart. We'll look at the continuous contract on platinum here, see what it is doing. Give me a moment here to pull this up here. So we got platinum. Let me refresh my screen so we get some active data. It's traveling out at 1448.61. So let's pull this back and see what it is doing. Platinum here is not trading inside that swing point from April the 16th. No, it is. I take that back. It is now inside that swing point. We got inside there. It got inside there on Friday. So the low of that swing point is 1374. If we take a look at its retracement, though, from low of April 16th all the way up to the high that was put in here. Wow, that's weird. What happened to my little ruler out there? Let me try this again. There we go. Okay. It was just trying to fake me out here. So let me pull this back. So if we do take a look at platinum, what platinum has done, so of the three metals out here, platinum, gold, and silver, platinum is the stronger. Now, I say that by just simply coming off of the swing point low from April 16th, 1374.60, all the way up to the swing point high that came in on April 29th. That was 1525. The actual 618 retracement is 1432.40. What we saw take place overnight is a move down to 1430. So the 618 level has not been pierced out here, but I suspect it will. You're seeing platinum also travel inside that swing point from April 16th, and as long as you're inside there, it says, okay, maybe it too wants to go down and test its lows out here. It would look to me like that over the longer term, and when we put it together with the U.S. dollar index, says in essence that, that is what it also wants to do. But it has stopped at the 0.618 retracement level. On the daily chart, you're not seeing any bullish candle formation. Volume so far here in platinum is only about 6,700 shares. That's going contracts. That's going up against 8,000 contracts from April the 25th. So it's pulling back into that area somewhat nicely here. So that's on the continuous contract for platinum. Let's go out to Victor in Paramus, New Jersey. Victor wants to take a look at Facebook. Victor, thanks for calling. Thanks for holding. How are you this morning? Hello? Looks like Victor dropped out there. So sorry about that. You want to take a look at Facebook, but I don't know what he wanted to look at there. So let's just move on. Let's go take a look here at some of these equities here that are moving inside the marketplace. So I want to take a look at what is the biggest percentage mover out here inside the NASDAQ 100, and that is going to be Priceline. So you've got Priceline, Bib, Apple, and Mylan Inc. out here. So you got Priceline. That truly is the new Apple out there. So as we take a look at that, looks like Victor is back on the line. Victor, thanks for calling back after the phone drop there. So you want to take a look at Facebook?
Yeah, it's the same price it was almost at expiration last month, and it has pretty good volume right now. So where do you think it's going? Is it going to go to 25.15 or bust through that and do it? If you go from the high to low to Fibonacci, you're at 25.69 or 25.17. Which one are we going to hit?
Well, it's on 15 million shares. You're right. It's got some decent volume for an hour and 15 minutes of trading. That volume of 15 million is really coming into that breakout of 123 million. So I would say that the volume still pulling back into a breakout session from November 26th. I think that the that level of 2481 is where you're going to get some type of test. What you don't want to see is you don't want to see it close below 2481. If it does do that, all that it will do, well, what it potentially will do is come back and just simply test the high of 2468. If it closes, if Facebook were to close inside 2468, what then you really are setting up is actually move down to the November 14th area where it broke out with some conviction, 229 million shares, and that area is in the 19 to 22 level. But so long as Facebook, and it has been tested this area a couple different times, and that is a small little gap up, small little breakout from November 26th, so long as it pulls back there on less than 123 million shares, that would be a place for you to consider taking a long trade. Now, the way that Facebook has traded, we haven't really seen a lot of conviction to the upside. I would think you can be patient and wait and just make sure that it were to close above 2481. So I don't think you need to go ahead and set your order up at 2480, 2481. I would wait to the end of the day, and not today necessarily. I don't think it's going to do it today, but I would wait for a confirmation that it's going to hold that area. All right, my friend?
Okay, thank you. Bye.
You betcha. You betcha. Now let's go back and let's take a look at some of these stocks here. Priceline is the next is the stock that is much better than Apple and even Google. If you take a look at it, coming off of its lows out there back in 2008, so it's not as respected as those stocks. But if you do take a look at it for some reason here, at least media-wise, you go back to 2008, $45 is what it was trading at, which was even less than what Apple, I believe, was in the 75-ish range out there back in 2008. So you had Priceline down at 45, and it's traded at 834 out here. So Priceline, a little rocket ship for sure. We take a look at where Priceline may be headed to. If we just look at expansions of swing points, we'd start with April 10th's high, 774.96, down to the low of a session that came in on August the 9th. The 1.272 expansion, that's what it's hit today. 835.22 would be the number. It's trading at 834.50. It has been up as high as 838.43 here this morning. So if it takes out that area, and you can see here that it truly is in the overbought territory. So I wouldn't exactly chase this equity here. I would wait for some kind of pullback, but that doesn't mean that a Priceline won't move up to the 911. 911.87 will be your 1.618 expansion. If we take a look at A to B equals CD patterns, looks like this has made several of them. Let's take a look at this first one out here. Coming off of the lows, this was a high-volume low that ended up being tested. So Priceline did have some institutional selling back in August of 2012, August 8th, as it moved down with 6.6 million shares. But that area was tested, successfully tested, on much later volume, 779,000 shares out there. And then you saw a little sign of strength come into it on November 2nd. So that's what you are waiting for, something coming off of the bottom with a successful test. Your A to B, your first A to B equals CD. Inside this, that was fulfilled. That was starting off that swing point low on October 23rd. That was your A point. Your C point was December 27th. We can see that it made that 1-to-1 A to B equals CD and just traveled sideways for a while. 877-927-6648. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. A pretty quiet market out here, somewhat to be expected after the move that we did see on Friday. The number to be watching today, I'll give you the number to watch for, and that would be on the New York Stock Exchange, the net declining issues out here. We get a net declining issue of 546. That will be a signal that the bears have actually taken control of the market. They have not as of yet for sure, but that would be the number that you should be looking for right now. You've got advancers leading decliners by about 295, 1,566 advancing issues, and 1,273 on the decline side. But net declining of 546 today or higher, that would be your signal that the bears have somehow been able to wrestle the market away from the bulls intraday. But we're away from that right now. Let's take a look here at WPX is the ticker symbol. That is a energy stock. WPX is, give me a moment here, tell you exactly what it is. It happens to be inside the S&P 500, one of the leaders percentage-wise today. They are an oil and gas, natural gas exploration company. If we take a look at this equity, what we can see is it had a IPO back in December of 2011, 12/12/11. The high out there was 23.42. This has now a confirmed A to B equals CD. It has probably a couple of them that we can look at. Let's take a look at the first and second one. So the first one is coming off of the low on June 14th. This price point was 13.22. That was your A point. Your B point up here on October 11th, 18.31, all the way down to your C point that was formed February 28th in 2013 out at 14.03. You can see it's already above the 1-to-1 on the daily out there. That says 1 to 1.272, 2052 should be the target. It's trading at 20.79 right now. That's one of your A to B. What the heck happened there? Let me give you a correct number here. I must have, who knows what I was looking at there when I drew that A to B equals CD. But let me give you the right one here. I must have a little mouse problem, maybe my battery out there. So let me make sure here. So the 1 to 1.272 is 2050. Maybe that was the number that I gave you. In any event, let's take a look at a ABC within an ABC. That's coming off of our C point low. That would be 14.03 out here, up to the swing point high on April the 11th. That had 3 million shares, and then we'll go ahead and pull back into the C point on May 2nd. As I said, the B point here was 3.1 million shares. You gap up above the B point, and you do it with 6.2 million shares. You had wide price spread, accelerated volume. That gave you another A to B equals CD. Let me go ahead and put this one here in red, make it a little bit easier for those of you watching on Tiger TV. You can see the 1-to-1 there was hit at 19.05. The 1 to 1.272 around 2011. So looks like this, which is WPX Energy, that is headed to the $20.52 range out there. Let me take a look at the other things moving here. Team Inc., TISI. Let me pull that up. That is a big laggard here inside the S&P today. TISI. That is truly getting hammered. It's down 17%. It's got wide price spread. It also has accelerated volume. This thing broke through the, this is the beauty about windows out here. This window was closed here with conviction. January 7th, it had gapped up with 635,000 shares, but it came down with 1.2 million shares. So that was volume off of the top here. That was a sign coming into a breakout area with accelerated volume. That was not the type of breakout you want to buy. In this case here, you're now seeing additional follow-through, and that is on Team Inc., TISI. Speaking of Team Inc., folks, stay tuned because Basil Chapman is up next, and he's going to take one for the team. He's going to be doing 2 hours live with you today. He's filling in for Larry's show from 12 to 1. Then we've got Daryl Martin, then David White, and we've got the Tom O'Brien show from 4 to 6. Have a great day, folks. Always remember, the way you do anything is the way you do everything. Become a pioneer of your future versus a prisoner of your past, folks. Have a great day. I look forward to seeing you tomorrow morning. Take care.